Good afternoon, welcome to GrainTV. My name's Cody Bills, this is Logan Burgess. Today is Friday the 23rd and we had the market moving sideways to slightly lower here. Wheat trading down 6 3/4 cents. We had corn trading up 1 1/4 and soybeans trading down 3 1/4 cents here. Now we know that soybeans has been incredibly volatile here in the last couple weeks. We've had sharp movements higher as well as sharp movements lower. Today mostly unchanged here. What are you watching here?
Well, right now, Cody, we kind of wanted to take a look here at throughout the week. What was the price action that we saw in that November contract? And you can see here from this slide, this is actually a 15-minute chart. So each bar that you see here represents 15 minutes of trade action. You can see across the bottom axis, this is showing us that trade action Monday through Friday. And we've added this 200 period moving average here. So it's basically using the last 200 15-minute periods to generate this moving average. And as you can see here, once this market started moving sharply higher on Monday, it was actually quite powerful in predicting where we would find some buying interest re-enter this market. You can see here it's done a great job tracking the trend, and as you and I were watching the close of today's action, we saw the market coming back toward this 200-day moving average. We were able to close above it. So the big takeaways here is that going into the weekend, it looks like this November 14 contract could have another positive open on Sunday night. The trend looks to be intact, but certainly if you're looking at pricing new crop beans right now, this is a great tool to be using. As I said, it's the 15-minute chart of the November 14 contract, and we have a 200 period moving average added here. You can go over to grainhedge.com. You can take a free demo of the same trading platform you see here. And as always, if you have questions about charting this contract or adding any of the technical indicators that you see here, that's what we're here for in the office. Our number is 877-472-4607. You know, it's Friday here, Cody, so we like to discuss the cash market a little bit in detail. What are we seeing right now in basis, especially considering the big run we had in beans?
Well, you know, when you look at basis, really what we saw is an improvement in corn by about 2 cents on average across the U.S. Soybeans was slightly less, up 1 3/4 cents, but that's very surprising. I mean, we were up 48.5 cents from Thursday to Thursday of this week. That's significant, and typically in an environment where price action is rocketing higher, you typically see basis weaken as a lot of producers start emptying some of those bins and making sales into higher prices. That's not something that we saw this week, though soy plants did improve only a half penny instead of going negative. You know, we also saw an improvement by about 1.5 cents along the river. The bottom line here, though, is when you look at these maps for both corn and for soybeans, you're going to notice that there was a significant basis improvement again in the Northwest. When you look at corn, you'll see North Dakota, South Dakota, Minnesota, all areas where we saw improvements for corn. When you look at beans, you'll notice significant improvements in North Dakota and South Dakota. Some of this is coming because you know, planters are farmers are out there preoccupied with planting, unable to make deliveries to grain facilities, and these grain facilities are finally able to lower some of their stocks, get rid of some of that inventory, and that is always positive for basis. But when you look at that Northwest, what's really plagued them over really the last 4 months is the rail situation. And finally, it seems as though the secondary market is showing improvements. We saw tariffs for shuttle and non-shuttle bids coming in at $188, and that's below tariff compared to $6,000 per shuttle car here. That was during the height of this rail situation. So we are seeing improvements in the rail. We are still a long ways from solving this this problem, but it is nice to see improvements, and it's reflecting in the basis.
You know, for farmers that are looking at making spot sales right now, what are some tools that they can be using, Cody? What are some things to keep an eye out, you know, as they try to optimize any old crop sales left?
Well, first of all, these maps are nice because they smooth the improvements across the entire region. But that region is made up of many cash locations, and not all locations are improving as much as others. Some have been more proactive about locking in shuttles, locking in rail cars, and they can move grain out faster. Those are the ones you're going to want to be watching. So I would say if you're interested, you know, go ahead and take a demo of our platform. You'll also get you'll get a demo of the optimizer, which allows you to find the best selling opportunities in your region, and it takes into account trucking and storage costs. If you don't want to do that, just give us a call, 877-472-4607, and we'll look it up on our end and give you a bit of an answer. So thanks a lot for tuning in, Logan. Do you have any other questions here?
That's about it here for Friday. Thanks a lot for joining us on GrainTV. Everybody have a great Memorial Day weekend out there. Big thanks to all the veterans. We'll see you back here on Tuesday.